Next question is, what are ETFs? How are call and put options different from ETFs and normal stocks? Yeah. So ETFs stands for exchange traded funds. And I don't want anybody to ever buy mutual funds because they're a ripoff and they're a scam and the fees are so high. And there's a lot of hidden fees too. And they underperform ETFs and indexes. And I have a vlog on this. You can search on my YouTube channel for mutual funds scam. They are a scam. One of the reasons they're relevant is because they have these great long-term relationships with big companies, and they advertise a lot, and they have a lot of lobbyists as well in DC and other political hotspots in the world. So ETFs are exchange-traded funds, and let me show you an example here. There's the SPY, right, which is the spiders. That's what they call it. And so this here is basically a collection of all 500 stocks that make up the United States index of the S&P 500. And don't ever pay for any finance software. Don't ever pay for Bloomberg or any of that stuff. I used to pay thousands of dollars every month for Bloomberg, for my analysts in my company. Not anymore. I go to Yahoo Finance. It's free, just as good. Just make sure you don't read the sponsored stories below. Okay, like this here, this ad, right? It's almost criminal sometimes, these things they show. And if you want, you can actually do a search on Motley Fool review. And I published a vlog recently on that, just with my honest thoughts on it. Yeah. So you can go here and find out the holdings as well. You know, what is in the S&P 500? Well, here's all the sectors. Okay, the largest sector is technology, which is a large percent of the U.S. economy now. And if you scroll down, you'll see that most of the stocks in the top 10 are tech companies: Apple, Google, Facebook, Microsoft. Right here. Here they are. Yeah, Amazon, etc. Yeah, that's Google there. And so that's ETF for that. You can also buy ETFs for oil, which might be a good idea. And maybe or maybe not, I bought it recently because oil was negative. What the hell is that? So the downside was very limited. I'll never tell you what to buy. Always do your own research. Or you can buy Brazil. So here's the ETF for Brazil. And this is, Brazil is a very natural resource rich economy, kind of like Canada. And I'll show you Canada in a second. And if we go here to holdings, you'll find that down here, you've got copper companies, you got Petrobras, which is Petroleum Brazil, which is a big oil company, obviously, that sort of thing. And if you want to invest in Canada on the cheap as well, you can go here to another ETF for Canada, right? In Canada, like Brazil, it's natural resources rich. So you can go here to the holdings right here. So you've got Enbridge, which is a pipeline. Good for you, Shopify. It's awesome to see a tech company in Canada doing well. I love that. I'm Canadian. It makes me proud. You got an energy company here. You got Barrick Gold, ticker ABX. But you can also do ETFs for, let me see what else I want to show you. Gold. Yeah, gold. So GLD is the ETF for gold. So I don't like buying gold bars because I don't know if they're melted down or what's really in them. Plus, it's a pain in the ass to take them and put them in a safety deposit box and all that stuff. I don't mind paying like a 0.5% fee for this. It's really liquid. It trades a lot. So what we can do is we can go to profile and see, well, what are the fees? Well, the expense ratio here is actually pretty low, right? It's 0.4%. It's not bad. It's pretty good. And that goes for all major ETFs from large companies like S&P, Schwab, Vanguard, et cetera, et cetera. All right. So your next question was, what are options? What are calls and puts? Yeah. So they're different from ETFs. So a call is basically a way to bet a little bit of money on a stock going up a lot. And if it goes up, you make a lot of money. If it goes down, all you lose is this little amount of money. Now, a put is the opposite of a call. A put is you buy a small amount of money in a put, and if the stock goes down, you make money. If the stock goes up, you lose money. That's how it works. That's how it works. And if you have additional questions based on that, please let me know. And please don't ever short stocks because the losses can literally be infinite. If you want to bet against a company, I would look at puts. Yeah.